German bond yields expand, rise on inflation pressures. ECB German government bond yields rose sharply on Monday as signs and symptoms of broadening inflationary pressures in Europe's economic powerhouse and hawkish feedback from pinnacle policymakers reaffirmed expectations of higher interest rates inside the bloc. In a sign that inflationary pressures were becoming extra wide-based, IG Metall, Germany's most effective union, desires to push via salary will increase of among 7% and 8% in an upcoming spherical of bargaining. Speaking days after an emergency European Central Bank Assembly final week to cope with stress in bond markets, ECB President Christine Lagarde stated salary increases are nonetheless probable to accelerate and reaffirmed the ECB's plans to elevate hobby costs twice this summer season. ING's senior prices strategist Antoine Bouvet attributed the bond's sell-off to the IG Metall union-encouraged pay rise and comments from Lagarde on wages. Although this IG Metall information shouldn't come as a massive marvel, the headlines possibly resonates with Lagarde caution about a choose-up in wages, and approximately wages boom last above average for their forecast horizon, stated ING's Bouvet. Benchmark yields in benchmark 10-year German authorities' debt rose 7 bits per second to close to the day's highs at 1.73%. Yields on short-dated 2-year debt additionally rose through a similar quantum to 1.14%. French bonds barely underperformed after Sunday's election setback, which would force Macron to barter alliances with other parties. France's 10-year yield rose 5 bits per second to 2.251%, with the unfold among it and Germany widening with the aid of 1.5 bits per second to 54.5 bits per second. The bond market isn't highly touchy to this depend French politics, as it is focusing at the ECB's subsequent moves to avoid an immoderate widening of spreads between middle and outer edge, stated Andrew Mulliner, head of global aggregate strategies at Janus Henderson. The pass higher in German yields also pressured peripheral bond yields higher, with Italy's 10-year government bond yield rising 7 bits per second to a few 76%. The spread among Italian and German 10-year yields tightened by way of 0.5 bits per second to 198.5. It tightened from greater than 250 bits per second to under 200 bps overdue final week after the ECB announced a new anti-fragmentation tool to prevent an immoderate divergence in nations' borrowing charges. Elsewhere, the EU hired a syndicate of banks to sell a new, 25-year green bond, if you want to be launched on Tuesday, difficulty to marketplace situations, in step with a memo seen by way of